Welcome to today's Corporate Venturing Insider series. Today, I'm so excited to have Patricia Kroondijk from Canon Marketing Japan to join us. Patricia, welcome.
Thanks, Nicolas. What a pleasure to be here.
So, Patricia, I always like to start with this question of how did you get into corporate venturing? What was your journey?
Yeah, I can elaborate a little bit on that. And I have to say, a lot of it was also luck. So I did about 15 years of consulting, actually, strategy consulting for one of the big four. My specialty was very much finance for CFOs in financial services. So it was hardcore banking, insurance, and then the financial side of that. And I did a lot of strategy work for the banks and insurance companies as well, mostly in Europe, actually. And then we decided to move to Silicon Valley. When I landed there, I had no job. There was no financial headquarters, but there was a lot of tech. And so that's when I actually rolled into fintech, insurtech for a Japanese company who hired me for my knowledge of the financial processes, the financial side of building business cases, strategic side of looking into the future and deciding where could we take some of these initiatives. And they hired me into an innovation unit. And that is about 10 years ago. And that's how I started into the corporate venturing world. And from that role, I saw pretty much everything you can put under corporate venturing because it was a very large organization. So we can talk more about that later. But that was my starting point.
Very nice. Well, actually, let's start with corporate venturing. What are the different pillars you've worked in? And then I can double click on each of them.
Yeah, sure. So where I started was at the time it was called an open innovation lab, and it was a mix between finding the right use cases for technologies and then also working with corporate customers to apply those use cases. And we also did a lot of future insights and foresight work. I worked for and still work for a different Japanese company now, but Japanese culture really likes to look 10, 15 years out, call it kizashi, the foresight element. So that's where I started. Then I did some, I would say, deal flow sourcing for the initial stages of the corporate venture fund that we were launching and supported on the corporate venture investment side. Then was asked to build the venture studio, which is venture building. So did that for about 5 years and then transitioned from fintech into climate tech. So moved into that area. And then, yeah, of course, venture clienting sort of throughout the whole road.
So I need to ask because clearly you're a numbers person and even fintech was your way in. But let's talk about intuition. So tell me more about this apparent duality.
Yes, it is a duality indeed. But I like to back up the intuition with numbers, but I do feel that you cannot get around or just propose something based on intuition. You need to back it with numbers. So I think the combination of those two, intuition and numbers, is very, very powerful. If you can get that story right, yeah, I think you have a great case to present, whether it's an investment or a new project to do venture building or setting up a new fund. Those are all big investment decisions.
So, I mean, for the audience who are thinking about corporate venturing, it's tough to talk about intuition when they haven't done it yet. But how do you get confidence over time? And how do you present even because when you base on numbers, it's fairly straightforward to be confident. But when it's on your intuition, and even if you back it with number, how do you present it? Do you have any tips?
It's a really good question. So I have a checklist. And so there's things I typically like go through. It can be even news articles, just to get like a sentiment of what's happening in the EV space or what's actually the infrastructure that's necessary behind some of these ideas. And so I think matching that back, and that's why I often say when you do corporate venturing, you don't look just for product market fit, you look for product market corporate fit, which is a third element. And so this triangle that you're trying to match up. So I think that's the full complete story that I think would have to be painted.
I feel like there is a golden nugget. Tell me more about this corporate fit and how you assess it.
So the corporate fit is really the appetite of the corporate that you work for and where they would like to grow into the future. So, because corporate venturing is all about new markets, new products, or whatever your matrix is that you want to expand into. The match is really, it's very subtle because it can even be personal views of your executives. Like I know someone who I worked for and he was like, I don't like smart cities. And he didn't, there was no, there was no financial backups. There was no analysis on why not. But if that's the case, just accept it and then move on. So you need to have quite regular dialogues to see where things are going.
So it reminds me of the LinkedIn post you posted, and I think you illustrated it well. And I think it touched on a level of maturity. I think you wrote something about if there's a project you really, really want to push, but no one wants it, move on. And I thought that was really good because most people feel like they have to keep pushing until the corporation will agree. But actually, there is no point to that. You have to listen to what the corporation wants and be in tune with that. And I thought the way you framed it, which is move on, was really, really good. I think the way I would even frame it is a person telling you, for example, they don't want smart city. That's a gift. They are giving you the most beautiful signal that you don't need to spend any time on smart city and you're saving hundreds of hours for you and your team not to work on something that would not lead anywhere. So it's like a gift. And I think the path of least resistance for me, I always think that very powerful rivers have been created by following the path of lowest resistance. And so if you want to go somewhere where it's going to be full strategic, full speed, full corporations follow, that's because they felt that there was something, like you say, corporate fit with whatever you're proposing.
Yeah, exactly. Couldn't agree more.
Okay. Now let's go back in time. So the Open Innovation Lab, can you share maybe something you learned from that time, which you are still using today?
So we were in Silicon Valley at the time, was 2015, 2016, and it was all about blockchain at the time. It has probably already been for a few years. And it was a big hype. And, there was written a lot of investments and things like that were happening. So I always remember that now when I see big hype, I'm thinking, there is a counter hype somewhere else.
That's a golden nugget, looking for the counter hype. It's a good one. And I think it speaks to the decision on timing, when to introduce something inside the corporation. And you may have invested in a startup, but it's way too early to introduce. And you just wait for the right time for that intersection of interest, which I guess is part of the corporate fit. And I think that timing is one of the most important decisions you can make. And if you have an ability, like you mentioned, of a sandbox, to get it to a level where it's less fragile and more demonstrable, you're more likely to get the interest. And if you show it too early and it gets shut down just for fragility versus intent.
Absolutely. Yeah. Even now, we have the company I work for now, we're even interested to sponsor proof of concepts for startups that did find a corporate to work with, but it's not our corporate. But we are just willing to, invest a little bit to observe on how it goes. So another corporate is our sandbox in that respect.
Now, I don't want to echo too much on the sandbox, but I think you talked about doing venture building. Can you share also what you learned during the venture building exercise that you still use today?
Hmm. Oh, I learned so much in the venture building side. It was interesting. We did a project with another corporate. So we did venture building with two corporates because we wanted to spread the risk. And then we ran this venture building exercise. And we were actually thinking that could be a model for us to share risks in the future. And so we would venture build with other corporates. But actually, in the end, the difference in agendas and the number of agendas at the table was just too large. And so I took that also as a learning point, and I still use it today where I don't want too many business units, even if it's internal at the table at the beginning. I don't want too many startups at the table too early either. Focus is so important. And then you can start to expand.
Nearly counterintuitive, right? Which is it's better to go slow with fewer people so you can actually go faster.
Yes. Also, there's a fine balance between the speed. Slow is sometimes good, like you said. It's good to test, it's good to try things. And also, like, the stakeholder management is just so much more massive with so many more business units and reporting lines and who's going to pay for what and all of these questions. It gets so much more complicated.
Now, let's talk about Canon Marketing Japan. So first, what the firm is doing, because Canon is clearly a very famous brand, but you're part of this entity, and what it is that you're building.
Yeah, sure. So I always have to specify that I work for Canon Marketing Japan, which is really a mouthful. It's a subsidiary of Canon Inc. That is the actual headquarters and the main umbrella company. And this is a subsidiary that's 51% owned by Canon Inc., but actually 49% is owned by other shareholders because it's listed separately on the Tokyo Stock Exchange. It's still significant subsidiary, 16,000 people, a few billion in revenues. And this is the arm of Canon that takes care of all of the marketing for Canon's products in Japan. And so it's very much a sales and marketing type of DNA that's inside the company. And this is only in Japan, by the way, so not global. And the other thing they have is quite significant business in software. And on top of that, they have been a channel partner for global tech to be brought into Japan. So they were the ones who brought the Apple computer into Japan. And so they've always been supporting scale ups as a channel partner into the Japanese market. And so it's an interesting group. And a year and a half ago, so quite recent, they decided to do two things. One is to build a fund, and they launched a fund, a venture fund, about $60 million, seed Series A. We've done about 13 investments now, mostly in Japan, and this is quite a generic fund. And they have built a venture building team, and it's the same team where there's about 6 teams and about 15, 20 people now building ventures in each cluster, in these 6 clusters that we have. And they are resilient, so more climate oriented. They're also more bit society oriented on inclusion and fairness. We have AI, there's some food and agriculture. So it's quite mixed as well. Nothing to do with the printers and the cameras again. So really opening up new markets and new products, mostly in Japan. We're looking at a global strategy, and I joined only 9 months ago to represent all the European activities and Middle Eastern activities, both for the fund and for the venture building side.
So there is a design choice which is very interesting, which is to have the venture building and the CVC as one team,
Yes.
which I'm sure create tensions between priorities. Can you speak to that design choice and what that means on a day-to-day for a team like yours?
Yeah, it's very interesting. It's the first time I've really seen this in action as well. Myself, we were quite separate at Hitachi, I have to say. And the idea was that they also didn't want to create a lot of different teams. And so they wanted it to be very contained. Like, we're doing this together as one package to create the new business for, 2050 kind of thing. And it is. It's same topics. It is the same vision in the end. It's just different routes, different tools in that sense. So they understood that quite clearly. That's the difference, and that it can be very beneficial if you are doing deep dives on the CVC side. You pick up points and knowledge that you can also build a venture around. You don't only invest. The other thing is since we have no IP, because all the R&D sits under the Canon Inc. side, we need to utilize some of the startups that we invest in for our venture building. So there was clearly from the beginning, we knew we needed that sort of two-way, communication and sharing of knowledge. And that's why the team is, in the same group. And there's even people who are in the CVC and in the venture building side. And that's very, very interesting because yeah, often when we're venture building, we're like, oh, well, we actually need a startup. How can we do that? And once you venture build, why wouldn't you, with a startup, why wouldn't you invest, right? Because the upside is much bigger if you can grow this company together, and you should take a stake as well. And so I think it makes total sense to do that together. And I think it's been quite successful for now. And we are realizing with some of our investments, some really great expansion for them in Japan. And they,
See, hey, it's like you are able to build or to partner, and by investing in the startups that could help build a total solution.
exactly. So we can partner, we can build ourselves, we can invest. Well, M&A is not really on the radar because of we don't have the budgets right now for that. But yeah, then within that cluster, it's like, okay, what do you want to build?
Now, let me stress test a little bit that. So you have a cluster like resilience. You're looking at many, many startups who are in that space. Is it that you're going to build what it is that you wish to find, but you cannot find it in the startups? Or do you start building, learn about the space, and then start investing in the startups that are complementary? I'm trying to understand which one is
Mm.
more likely to come first.
We do a bit of simultaneous right now, I have to say.
Mm.
So we have a vision, we have a blueprint, let's say, of what we would like to build. And so, but we also know we don't have anything ourselves. So we fairly quickly go out to our ventures portfolio or startups in the market that are not invested in yet to start to pilot. But also for some of the ideas, we know the Japanese market is challenging and we may need to build something ourselves. And so we would, well, before to invest, we would look at startups. So we do a little bit at the simultaneous, I have to say, to see what works. So it's a lot of trial and error actually. It's also quite a bit of testing that gets done.
Now, what it is that in that design you like the most?
Yeah, so the fact that we know we have to go outside is really speeding things up. Let's say a test or POC at my previous company would take anywhere between, I would say, 6 to 12 months. Now I've gotten, within 3 months, I have something signed and we can actually start trying stuff. Yeah, and we want to get, one of our KPIs is the number of POCs as well. So
Mhm.
literally the number of POC is a KPI. And so that makes, the testing quite fast.
I think there is something to do with your mothership, which doesn't have IP, doesn't have R&D. So it's all about value creation, but not you don't have this not invented here reaction that might happen in other corporations, right? And so you can go full speed into you define your clusters, you know what it is you want to build, and then you can go as fast as possible to find, which by the way, I'm sure means that the entrepreneurs you meet get energized because you're finding what it is they are building. If it resonates with your cluster, you can engage very quickly and you know what you both want to achieve.
Absolutely. That's exactly it. And there is, by the way, R&D in the mothership of Canon Inc., but we don't have access to it. So Canon Marketing it's a sales and marketing organization and some software developers. So we can support on the software side and also on the hardware maintenance and things like that. But we have nothing else. And that's actually a good thing because the not invented here at my previous company was very common and
No.
it was a political minefield a bit.
And you mentioned the team is about 15 to 20 people. Are they mostly Japanese or you have a mix?
100%. 100%. Yeah.
So you're the only exception.
I am in Europe and I have one colleague in San Francisco.
I was going to ask a question about team building. How are you thinking about the team building best practice in the making for when it's one team?
So right now, to be fully transparent, and this is public knowledge as well, the fund is run by an external VC as a service. But our ideal situation for the future is the fund run internally also, or with a team that is Canon. But we're the only LP, by the way, now. So it's just a VC as a service. And that our venture building team, our ideal setup is actually, I would say it's a networked organization, because the topics and the expertise that we sometimes need, and the same for CVC, by the way, you need to activate these people, but you might not just need them for 2 months or five chats or 6 months. So we want to build a very solid, like very lean base foundation internal, but then have a networked organization around that we activate when we need the support. We very interested in finding partners that can help with either the deal flow, the testing, building, any type of ventures together with them, even maybe co-managing the next fund is also an ambition of us as well. And then to also balance out Japan versus global resources. But because all of our customers are 100% in Japan right now, that's definitely where the weight is. And so that will for sure in the future also be the biggest team. But we do need to balance it out a little bit.
So I want to double click on the VC as a service, but not from a point of view of what you experience today, but more in terms of what would be the advantage for a corporation that wants to start a CVC to start with a VC as a service, and what they should watch out to decide whether it's a good firm or not a good firm
Mm.
and the right path. So
Hmm.
what, abstracting Canon from this, but from your point of view, what would be the things to watch out for?
Yeah. So I would say two things. One is how they will align with your priorities, whether it's cadence, the deal flow, searches. How can they find that corporate fit? How will they go about doing that? Of course, regular deal finding, that's kind of, table stakes. The reputation of the firm is very important, so they can actually find the right deals and get invited to the right tables, let's say. So I think those two are critical.
Okay. Now, this is my last question, but earlier in the interview, you talked about insights and foresights. And I like that. And I think it's actually a golden nugget inside. Can you speak to that?
Yeah, so foresight, it's actually projecting yourself or your customers into the future and designing what that new world would look like. And from all angles. So you create really a picture of what does, insurance look like in 10 years, or if, okay, if you have this world, then we work backwards. Okay, what does it mean for insurance policies? So don't, if you only have 2 days, don't go into a huge foresight exercise. It can be very helpful. And then insight is much more on where you think there might be a problem or something there to solve. What's actually happening there is the insight that you need for me to decide, is there something there that you want to, invest in or build a venture around, or invest in a startup.
Yeah. At TDK Ventures, we also like to do this. We call it differently, but foresight is basically dreaming different type of futures, and then we backcast from it, and we see what's missing to get to that, and search for the entrepreneurs building something, these gaps. So I think it's very similar, and I think it helps to think about what it is that's missing to get to a different type of future.
Yeah, that for sure. And it helps you to think in portfolio style,
Yep.
because there's never one solution to what the future will look like. And then you can also start plotting, your initiatives and how they fit together, and road mapping and all of that.
Well, Patricia, thank you so much for your time. I think your passion is obvious, and I love the way you deconstruct the design that you experienced in the past and today and share it with the audience. So thank you so much.
Thanks, Nicholas, for inviting me.